Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/thesmattering, to get access to the 10 best stocks to buy right now. Nobody knows what's going to happen with the market, but if we see all of the things that are creating uncertainty kind of fall away and we see some improvement, this could be a great year to own stocks. I'm Jason Hall. This is The Smattering. I got Jeff Santoro here with me. We're going to talk about Starbucks. Hey, Jeff.
I think Starbucks stands to have a really good year regardless, but especially if we have a bull market in 2023. The first thing that pops into my head is consumer confidence and consumer spending, right? If we're in a scenario where the market's doing well, it's probably tied to the consumer doing well, right? We don't have if we have a recession at all, it's minor. People are still spending money, and they're spending money on things that some people might consider to be discretionary things, like a fancy Starbucks coffee rather than making it at home, right? So that's the first thing when I think about what could lead to a 2023 bull market and how it could benefit Starbucks. The second thing I think could really help the overall market is how things go with China. China is Starbucks' second biggest market after the United States, and a lot of their future success is going to be tied to their ability to open new stores and drive traffic to them in China. And, we've seen at the end of 2022 here, some shifting in China's policy about COVID. They're dealing with a surge right now, but in a world where the market has improved, the world has improved, and China has reopened, or at least is making strides towards reopening, it's easy to see a scenario where that all of a sudden we start seeing more revenue coming out of China, and that's really going to help the bottom, their top line and their bottom line. And the third thing I think is they've made a lot of investments in the stores. That was one of the first things that the interim returning CEO, Howard Schultz, did when he came on board, was he stopped all the share repurchases and said he was going to put that money into improving stores. So that's we might see a hit on margins as they sort of spend that money on the front end. But again, in a world where the consumer's feeling strong, the economy's doing well, and people are spending at Starbucks, all of those investments are going to pay off. And the rising tide of a bull market might actually mask some of the margin compression that we might see that in a non-bull market would push the stock down. It might actually help buoy that a little bit and give us some returns, even as some of those numbers aren't as good as they could have been.
In April, we're going to get a permanent CEO at Starbucks. He's there right now, working alongside Howard Schultz to make those improvements. To me, that's like kind of one of the uncertain points, is what's going to happen this spring and summer once we have Schultz kind of back out the door again and the new permanent CEO in place. I'm relatively optimistic because, again, this is a company that I think at a corporate level has had a pretty good culture with management. You can certainly question their long-term planning, right, in terms of letting Kevin Johnson retire and not having somebody lined up to replace him with all of the issues. But Jeff, I want to circle back around to China because I don't think it's kind of hard to overestimate China's importance compared to other businesses that have tried to make China kind of their a major linchpin in their growth strategy. Its most important asset is its brand, right? And that's certainly less risky when it comes to doing business in China than if your IP is a technology or a patent or something like that, or some sort of an innovation. And to contextualize how important China is, China already has about 500 million people who are considered middle class, meaning they have disposable income. And coffee culture is really growing in China. And Starbucks has proven against numerous competitors that the power of its brand is incredibly strong. And it certainly seems to surpass cultural boundaries. It has low costs. Coffee is a commodity. Obviously, the fluctuations are there in commodity prices, but it's such a major buyer of global coffee. It has some really good cost advantages because of its scale. And I think that's one of the things that, even as it spends money on its stores in the US to optimize and improve, that again, as volume grows, I think you're right. I think it's going to help on the bottom line.